Wall Street is making important signals about the future of self-storage. Ever since the big announcement that Public would acquire National Storage Affiliates, bold stocks have been trending higher. NSA even trading above the implied buyout value. Today, we break down what the market is really telling us about the future of our industry. Welcome to Storage Unlocked, brought to you by our friends at P.B. Brown General Contractors. I am your host, Thaddeus Campbell, Director of Business Development and Strategic Branding at S3 Partners. Ever since the announcement back on March 16th that Public was set to acquire National Storage Affiliates, a deal that's set to take place officially in Q3 of 2026, I've been keeping my eye on what's going on with the stock price of both companies. Of course, it's going to be an all-stock deal with NSA shareholders getting 0.14 shares of Public stock per every share of NSA that they hold. Well, the question is, why are PSA and NSA still both rising? Institutional markets signaling confidence that storage is in a recovery. This is how the exchange is going to break down. Every holder of one share of NSA stock gets 0.14 shares of PSA stock. Initially, the announcement that PSA would be trading around $41 for NSA because Public Storage was trading slightly under $300 at the time. You can see the chart below breaking down the implied value of the NSA stock based on what PSA is trading at. Well, I told you that NSA is now trading above that implied value. Today, as of a half hour before the show, Public Storage trading at $310. NSA was actually trading at a 20-cent premium above that price. So what exactly does that mean? Well, essentially, NSA is becoming a tracking stock for PSA. The incredible spread, it's not a tight spread, it's actually a positive spread, which is very unusual in a merger like this. The market actually believing that Public Storage may have gotten a bargain in this deal. I got a chance to catch up yesterday with Zach Dickens, the Chief Investment Officer at Extra Space. Zach was on my other podcast, Stories Behind the Door. He talked very clearly about what the actual transaction market, not just the transaction of Public buying NSA, but the individual transaction market that's continued to grow and be stronger in self-storage, what it's telling us about the overall pricing of the REITs.
This is my feeling at the core is that we were oversold and that the valuations didn't properly reflect what was going on. Because I'm on the front lines with our acquisitions team, I'm looking at cap rates, right? And what's happening is that sales are happening at lower cap rates than where the public companies are trading. Now, something's got to be amiss, right? They should line up to NAV. That net asset value should be very similar. But we're trading at a discount effectively as REITs, even though we're more diversified than any portfolio I'm really looking out there today.
Zach's point is very simple. Cap rates, the lower the cap rate at purchase, the higher the value of the asset, right? It works in inverse in commercial real estate. Zach's point is that based on the cap rates that transactions are currently happening at actively, I mentioned a couple weeks ago on the show a deal up in Syracuse, New York that traded under a 6 cap, a secondary market, no value add. He's saying the stock price that the REITs are trading at is actually undervalued based on what the actual asset value of their current assets should imply. What is that saying relative to this deal? Well, we're going to go look at what happened in the immediate aftermath of Public announcing the merger. As is very common in announcements like this, the acquiring party saw a quick dip in their stock price. Public Storage's stock went down, but it only lasted for roughly a week. As the market started to dig into this transaction, as you would imagine, NSA's stock price started to rise. You can see that the purple is NSA's actual stock price. The green line is the implied value based on Public's price at the time, right? What is 0.14 shares of Public? What should that be valued for relative to NSA? The crazy part of this is that from the very beginning of the announcement, NSA has been trading above the implied price that it should be getting based on Public's price at the time. What is this telling us? Well, the market seems to believe that public is going to continue to trend in an upward direction. Some of the downward pressure, why is public trading below the price that NSA would seem to think? When hedge funds get wind of deals like this, they'll do what's called a merger arbitrage. They'll buy the stock of the company getting acquired. They'll short the percentage of the stock that's acquiring. So in this instance, for every 100 shares of NSA that they might buy, they'll short 14 shares of public. And so you're seeing a little bit of downward pressure because of the increase in shorts on that public stock. I'll get a little bit more into that later. Why do I think this is a great sign? And we'll get into that more. But what it's telling us is that the market is believing at this point that public has a very strong future based on what's happening with NSA and public's stock price. We'll talk more about what this means for the overall appetite for storage in the market after this quick word from our sponsor. Storage Unlocked is brought to you by PB Brown. Over $1 billion in ground-up construction delivered from single-story to Manhattan high-rise, institutional grade, engineered for performance, and designed to stand out. Great storage catches the consumer's eye, drives traffic, and helps lease-up happen faster. From Manhattan to Miami, California to Hawaii, PB Brown is the GC to trust for your multi-million-dollar storage development. The fact that NSA is now trading at or above the implied value based on the 0.14 trade per share says a lot about the market's current outlook on the deal. And while Zach Dickens couldn't talk directly about anything related to stock prices of Extra Space or Public or NSA, they are a publicly traded REIT, he did have a very clear view of what the market is saying in regards to the announced merger.
I felt like maybe they were oversold. Clearly the market felt that way if you looked at it today. So it's kind of those things where I look and I go like, man, I'm buying at something lower than my implied cap rate. Maybe my value should increase. And in the last few weeks, even though interest rates and the 10-year treasury has popped up because of the uncertainty around the war effort and inflation, which is always around the corner. It's the boogeyman out there, right? For all of us in our industry. So even though those things loom large in our thinking today, they're anticipating a recovery.
This makes it all the crazier. The macroeconomic forces that are supposed to impact storage have not actually been helping, right? There hasn't been an increased movement in the housing market. Interest rates have actually gone up, as you heard Zach say. Indicators of interest rates, the 10-year treasury and the 5-year treasury, those are going higher than they were just a couple of months ago when this merger announcement was made. But despite all that macroeconomic turmoil, the microeconomics of storage seem to still be very appealing to the market. People still buying what is going on with this transaction. The belief seems to be, and this was played out in the Q1 earnings report calls across the various REITs, and something Zach alluded to during our conversation yesterday as well, that we may have finally seen the bottom of this cycle that has persisted for 3+ years since the original Fed rate hike back in March of 2023. Are we finally on the upside of the swing? Well, we can certainly hope so. One of the big things that Zach alluded to that's a signal that we may be getting to the end is what he's seeing in the construction cycle.
I'm seeing slowing new starts. I'm seeing absorption rates work really well. I've seen rate pricing floors that have come in, and that's all helping us in this industry. So I see green. I see really, I was going to say lots of green doors ahead. I see blue skies ahead and a lot of green doors. But I'm thrilled about where we're going as an industry.
Fascinating conversation for any of you in the industry. Obviously, Zach Dickens, incredibly well respected across self-storage. A funny little plug there for the green doors, which was great. But if you're interested in checking out that podcast, you can click on the link below. That will take you to the live version that we did on LinkedIn yesterday. We'll also have that out on the YouTube channel in a couple of weeks. If you don't subscribe to Stories Behind the Door, a lot of that conversation was not about the actual economics of what's going on in storage. We spent a lot of time talking talking about Zach's journey in the storage industry. Of course, he joined Extra Space back in 2002. Some incredible things that he's been involved with. The Storage USA buyout, where Extra Space quadrupled the size of their company by buying a company 3 times bigger than themselves, which is incredible. And of course, he was involved very heavily in the Life Storage merger back in 2023. You can check all that out at the link that you saw. Well, let's talk about some of the forces that are having NSA trade at a premium right now. What is it that the market is seeing that's making it so that this stock can trade above the implied value? Well, there's some things here clearly that the market is believing about the announcement. The first is Public Storage, of course, projecting that there is going to be a massive savings on the operational side relative to redundancies between the two companies. Public believing that they can absorb these 1,000 stores and create $110 to $130 million in operational synergies per year. That is a massive lift in implied net operating income. When you lower expenses that drastically, the result is perceived by the market and should be increased net operating income, which of course increases the net asset value. Why do we expect PSA appreciation? Well, one of the big things PSA talked about in this deal was they believe that their ability to market, the way they run their facilities, is actually going to grow the revenue of the individual NSA stores. Public is the biggest name. Well, Zach Dickens may argue at that point, and the other good folks at Extra Space, but Public has been the leader in the storage space in terms of number of owned stores. This is only going to solidify that position that they have. Of course, you could start talking about managed stores and make an argument there, but Public has been the leader and certainly the leader in terms of valuation in the self-storage space. They believe that operational efficiency is not only going to save them money on operating costs, but they're also going to be able to increase revenue at the individual stores through their marketing appeal. So why are these things looking the way they are? Even though macroeconomics are making us say this may not be the greatest time for self-storage, when you dig into what's going on in individual stores, and we'll get into that in a little bit with what's happening from a same store NOI growth among the 5 major REITs, Wall Street is actually treating NSA like a scarce institutional asset right now, not a distressed seller, which is very telling for the state of the self-storage industry. Let's break down why it looks that way. I talked earlier about merger arbitrage, and I want to explain what this means. And this is actually fascinating about this conversation. Typically, what would happen is an investor would buy NSA, and then they would short the percentage of shares of PSA that you're going to get in the merger, right? So for every 100 shares of NSA that are bought, 14 shares of PSA would be shorted, and that would lock in the spread, right? If for whatever reason NSA or Public Storage's price dropped, they would get profit from the short, and it would make up for whatever implied value they lost in NSA, which is going to be lower because typically NSA would be trading at a lower price than the implied value of the buyout, right? This gives a little breakdown of an example here. This is completely an example. This is not the reality of what's going on, and this is what makes this fascinating. Typically, there'd be a spread merger there that NSA would be trading under the implied value that the acquisition would give them. Well, what we're seeing right now is actually NSA is trading 20 cents above the implied value. What is that saying? That's saying that the market, A, strongly believes that this deal is actually going to come to fruition, that it's actually going to be a completed deal. And B, that both of these companies merit a higher stock price based on their own returns and what's going on with the companies than what they were valued at in the market back in March. Very little other way to see this. There hasn't been a massive amount of just straight bull shorting on the Public Storage stock, or else you would have seen a steeper dive. And in fact, despite the shorts that have been coming by merger arbitrage, the Public Storage stock price, investors in the market have been hungry enough for that stock that it still continues an upward trajectory. We will certainly keep an eye on this deal as it's scheduled to close in Q3 of 2026. We've got 4 to 7 months to watch this absolutely fascinating transaction play out. Keep an eye on Storage Unlocked. We will certainly keep you informed of everything that is happening. And while the public NSA merger has certainly grabbed the headlines, that is not the only news coming out of the Q1 earnings report. Of course, last week I had a flex roundtable. I did not get a chance to break down the Q1 earnings, of course, after all 5 of the REITs had declared their earnings. I did a couple weeks ago talk a little bit about Extra and Public, which were the earliest to report. But I do want to give a little news that was fascinating, ranking the REITs based on same store NOI growth. Really cool to see H. Michael Schwartz and the group at SmartStop, the newest of the publicly traded REITs, topping that with tying with NSA at 2% same store NOI growth. This is fascinating because this is the first time in 3 years that any of the REITs actually have had same store NOI growth in the same quarter. The one standout here, of course, CubeSmart showing up at negative 1.4. But the crew at SmartStop was able to show a 2% increase in same-store NOI growth. Extra Space strong at 1.2%. You see NSA there, tied SmartStop at 2%. A shout out to our friends at StorageMart, the Burnhams, great friends and supporters of the show. Certainly appreciate them. They continued a streak that's now at 13 quarters over 3 years of beating the publicly traded REITs at same-store NOI growth. Congratulations to the Burnhams. Our friend Herbie Bowman, who's the director of third-party management. Really great operations by them. Certainly been a wild ride for SmartStop over the course of the last year. Of course, they initially went public on April 2nd of 2025. Some big happening since then. They raised 500 million Canadian, 350 million US through the sale of Canadian Maple bonds. Shortly after that, they announced the acquisition of Argus's management platform. They're integrating that into what they're doing. They announced recently a $100 million JV opportunity as well. So they've been making their presence known very clearly in the industry. And at least in Q1 of 2026, they lead the publicly traded REITs in same-store NOI growth.
We posted strong same-store revenue growth of 1.5%, NOI growth of 2%, and maintained average occupancy of 92.5%, while facing our toughest quarterly comp of the year. Operationally, we posted very strong results despite recent geopolitical news. With that said, 10 of our top 15 markets posted positive same-store NOI growth, and good expense control led to a 30 basis point growth in our same-store operating margins.
Like some of the other REITs like Public Storage and Extra Space, SmartStop is using multiple levers to create revenue. They are in the bridge lending businesses as well. They're using acquisitions. They're using ground up development, especially in Canada where they're heavily involved, to create separate streams of revenue. One of the big things that jumped out from their Q1 earnings call was their ability to control expense growth. Their expense growth was only 0.3% because expense is such a smaller number typically than total revenue. The 1.5% jump in revenue versus the 0.3% growth in expenses meant a 2% growth in overall same-store NOI. Kudos to H. Michael Schwartz and the team at SmartStop. Looking forward to seeing what they do, the newest operator in the storage space as a REIT. Very excited to see what the future holds for them. While the mega REITs are consolidating, SmartStop quietly building one of the most efficient operating platforms in the industry. Well, the flip side of that list may look like a downer for CubeSmart. The Philadelphia-based REIT is anything but down on what happened in Q1.
We're encouraged to finally see the inflection in same-store revenue growth this quarter, as the stabilization in operating trends we experienced in late 2025 is flowing through the financial metrics.
So what was the issue that saw Cube have a negative 1.5% same-store NOI growth? Unlike some of the other REITs that they compete with, they were not able to control expenses in Q1, something they assigned to an increased marketing push. As they've been dealing with the saturation issues that new development has caused in the industry, they've made a very targeted push to increase marketing to help secure occupancy in their stores. There was one other part of the deal that was sort of interesting for me as someone who's born and raised in the Northeast. I've mentioned over the course of the last 6 months how crazy the winter's been here in New Jersey. It's been one of the coldest winters in years, and it became a measurable event for CubeSmart.
We knew snow removal costs were going to be elevated over the prior year, and those elevated costs accounted for about 120 basis points of our overall quarterly same-store expense growth.
So over 5% expense growth in the quarter, 1.2% of that, 20% almost of their expense growth was attributed just to weather-related issues on individual sites. So fascinating, the things that can create issues. Of course, CubeSmart heavily invested in the Northeast, a high percentage of their stores in the Philadelphia and New York area, and it had a measurable impact. It wasn't just a hard winter for those of us living through it, also a hard winter for the folks running CubeSmart facilities as far as expense growth. They are very bullish, not bearish. They're very bullish on what's going to happen for the next 3 quarters of this year. They feel like in their earnings report and earnings call, they have a control on what's going to happen with expense growth through the rest of the year. Well, hopefully you tuned in a couple of weeks ago to our data partners on Storage Unlocked. If you have not gotten a chance to see what Noah Starr and his team rolled out on May 12th of this month, I strongly urge you to check out our friends at tractiq.com. You can go to tractiq.com/TSSR actually and schedule an interview, a demo with Noah and his team. They now are making it possible for you not only to get the incredible data that they provide, including the data from 4,000 CMBS-backed self-storage facilities in the country that allows you to see exact achieved rates in those facilities, a breakdown of their occupancy based on unit size, as well as income based on unit size, the most real data that we've ever had access to in storage, unless you were Public Storage or Extra Space. You never had that level of sophistication to make investment decisions, whether you're acquiring or you're developing. An incredible tool that they had. They announced that back in February that they made the deal with CredIQ. Shout out to Noah Starr and his team. Now they've made it possible for individual investors and developers to connect their platform to whatever they're using for an AI platform, whether that's ChatGPT, whether that's Claude, whether that's something else. That Tract IQ will integrate with your platform, and you're going to be able to let your platform help you underwrite these facilities using a plugin from Tract IQ to make very quick decisions on whether a project is worth digging into or not. So once again, shout out to our data partner, Noah Starr. I'm so happy that he partnered with our show. Their company has just done amazing things in the last year as far as data. They are making it possible to have the best data to make smart decisions as an investor in self-storage. Again, tractiq.com/TSSR. You'll get a demo. You also get a little discount if you do decide to sign up for their platform, but could not encourage you more to check out what those folks are doing with their platform and the ability to have faster market analysis, screen hundreds of times the number of deals because you can do it all integrating with AI. The next competitive edge in storage is not going to be just data. It's going to be the speed with which operators are able to process it. So kudos to them, the folks at Tract IQ. As you guys always know on the show, I want to make sure everyone understands what's coming up for regional and local SSA events. A couple things coming up in the next few weeks. Mid-Atlantic show is June 11th and 12th. Down at the Gaylord National. The spring SSA show has been at the Gaylord National. The Mid-Atlantic show was there a couple years ago as well. An amazing place there outside of Washington, D.C. Hope to see some folks down in National Harbor in a couple of weeks. And then the New York Self-Storage Association has their upstate conference up outside of Buffalo the following week. A great chance for some folks who can't always make it down to the Westchester show or to the investment forum. The Westchester show is coming in October of this year for the New York SSA. And then, of course, the investment forum, that's every January. Amazing events put on by the New York Self-Storage Association. Strongly urge folks in the market, and I've been saying this repeatedly, will continue to say it, as we see more and more consolidation in the industry. I think it's even more important for each of us in the industry to support these regional events, because groups like the New York SSA and the Mid-Atlantic SSA show, which is representative of New Jersey, Pennsylvania, Delaware, and Maryland. I think Virginia's in there too. I may be shortchanging Virginia. Those SSAs are on the front lines of making sure that our industry is addressing the legislative challenges that come to our industry, as well as introducing legislation that helps make it easier for our stores to operate. So please get involved. Hope to see you guys. I will not be at the Upstate New York show. I should be at the Mid-Atlantic show. Hope to see you guys there. I will be back after the break. Stick with us. We got some details on another very special roundtable coming up after the break. In self-storage or small bay flex, execution matters. S3 Partners moves projects from concept to completion with 3 integrated services. Project Sync manages your development, vendors, timelines, budgets, and construction oversight. Market Expansion sources opportunities in the right markets to grow your pipeline. And Deal Sync delivers institutional-level underwriting so you can pursue projects with confidence, helping you move faster and build smarter. S3 Partners. Storage, flex, growth. Next week, we've got a really cool episode coming up. One of the fascinating things of 2026 for me has been the incredible boom in AI agents in storage. I had Maggie Bodie of Unity AI on a roundtable earlier this year. They provide that service. She also was on Stories Behind the Door podcast. Kyle Lawrence was on Stories Behind the Door podcast earlier this year. I've had Tyler Chapman of Homegrown Storage was on earlier this year. So many folk, Tyler Harper, excuse me. So many folks that are coming into this aspect of the industry, and such a fascinating tool for storage operators to be able to use to just maximize their ability to serve their customers. So next week, we've got Albert Kim, who is partners with Kyle Lawrence at Storage Pilot, Ryan Chapman, not Tyler Chapman, Ryan Chapman of Lumio, and Tyler Harper of Homegrown Storage will join me on the show. All 3 have assets that help storage operators introduce AI into their facilities and help overall with the facility productivity. So really looking forward to next week, talking about where this is going in the industry. How do these folks see this helping operators? If you are an operator of 1 store up to 1,000 stores, this is going to be something you want to tune in and watch. That's next week. The week after that, shout out, I think I don't know what that date is. I think it's June 12th. We have another roundtable. Very lucky. John Lindsay, Austin McLeod, Hans Hardesty, 3 of the very best brokers in self-storage are going to join the show. We're going to have a wrap-up of Q2 for you guys as far as what brokers are seeing. That should be fascinating, especially with what we heard from Zach Dickens on the show as far as what he's seeing for cap rates in transactions. Massive week. I pulled out the pink shirt for some excitement because there's just so much going on in storage in 2026. I had an absolute blast breaking down. I've spent the last week digging in to the Q1 earnings reports and then the breakdown of what's going on with PSA and NSA. Going to be absolutely fascinating to pay attention to what happens in our industry throughout the course of the next 6 months. I'm Thaddeus Campbell. That's it for this week's edition of Storage Unlocked. Please subscribe to the channel. Follow us on YouTube so you get all the updates. If you don't already follow me or are connected with me on LinkedIn, please do. Would love to have a quick conversation, especially if you're involved in any way in self-storage or small bay industrial flex. One last shout out to our friends and supporters from PB Brown General Contractors. If you have a legacy type project in self-storage, whether it's downtown New York City, Miami, California, Hawaii, they're simply the best general contractor to choose for your multi-million-dollar storage or small bay flex project. That's it for this week's episode. We'll see everybody next Thursday.